All right, everybody, welcome to the next episode of the Prop Tech Genius Show. And today's genius is Phil Roselli. Did I say that right? Oh, dang it. We did
Yes, you
this
did. It's a pleasure to
again.
be here.
I do this all the time. I'm like, we sit and chat before the show, and I forget to ask people, how do you pronounce your name? That's so stupid on my part, but it's okay. I pretend to be a podcast host. So I'm pretending today. We're pretending again. We're pretending again. I've done this like 45 times, so we keep pretending. So it's all good. All right, well, cool. Well, welcome to the show. I'm so excited. You had some really cool tech, which is awesome around this whole thing around leasing and qualifying tenants and doing all that. And you're doing a new take on it, which is super cool. So I'm excited that we'll get to tell our audience all about that. But before we get there, you can introduce yourself to my lovely people who are watching the show and tell everybody who you are, what you do, kind of how you got started. Let's start there.
Great. Pleasure to be here, Amy. Thank you so much for the invitation. Um, I'm Phil Roselli. I started pretty early, actually. I was a teenage founder, so I started my first company in high school. It was an e-learning product. Spent about 4 years on it. Um, and the product worked quite well. It was used at a school for over 10 years, but we couldn't get traction on sales.
Mm,
And but it was good enough that I got recruited by an investment bank, and then that's how I started my professional career right off of high school. And so I spent about 17 years in the financial services space.
mhm,
Started as a software, engineer, and then over time gravitated more towards product.
mhm,
Um, and that career, so the I think the coolest thing I did was I did a mobile banking app for a top 10 bank in North America, 22 million
mhm,
customers, so on. So learned a lot, developed a lot of scar tissue around products, user experience, critical high volume transactional flows, and making things easy and fast for
mhm.
people. That product is it was a team effort, of course, but that product took on the number one spot in the App Store for 18 consecutive months.
That's cool.
And yeah, really great. And then we also, it was a dual purpose initiative too, because, um, I got to experience the team, growing from about 40 people to 400 over the next 4 years or so.
Mhm.
And understand really how everything breaks once your team starts growing, right? Like
For
exactly. Like every
sure.
time it doubles, you need new
Y-
processes. You need
Yeah, yeah, for sure.
um,
I mean, that is it's crazy. Like even you add one person, things have to change, right? Then you add, and then just the complexity, just around communication and how we arrange things and what we. I mean, yeah. No, no, I totally get you. That is like insane in the membrane. You went from 40 to 400, and
um, our team, yes, the digital team over at that bank, there was a big investment made. This was back then when there was a big move around like mobile first, right? And then like all the big social networks like Facebook famously like
Mhm.
went mobile first, right? And then everybody followed. And so it really paid off. I'm happy to talk about some of the cool things that were done during that phase, because then, like with the pandemic, I decided to, sort of put that career behind me and connect with
Mhm.
a few friends and start a company. That company is still there. I stepped away late last year.
Mhm.
I'm still, my interest in the company is still there. Um, I'm an advisor, but we were forced for many reasons to pivot too deeply into an area. It's like promotional marketing. It's not really my thing.
Ah.
So I decided to, step away, which is a hard thing to do, right?
Oh
When you,
yeah.
like, blood, sweat, and tears were put into,
Yeah.
growing something from scratch. We went to market in 18, like we actually went to market in 4 months with the MVP. Um, got to
Crazy.
revenue generation state within 18 months. And
Wow.
then around that stage, we realized that the sales cycle was going to be so long that we needed another type of product that was easier
Right.
to get in the door, right? And then so that's when we pivoted. And then Yep, made that decision to, and I had a personal project that I wanted to do, and I was fortunate enough to connect with a few other friends, and um, we were able to lock in a really good founder group. So we're four founders in this company, LeaseLift, and we've been together ever since. And what we're doing is, but actually, so I'm actually not a stranger to real estate, right? Like I come from financial services, always in tech, but my family has been involved in real estate for a long time.
Mm-hmm.
My grandfather, who was an Italian immigrant, um, you know, lost his father when he was 12 years old. Had to drop off school to support the family, right? And then he was first 15, 20 years of his career were basically growing something. He had a beautiful family and so on. And then the next kind of era was growing a real estate portfolio.
Yes.
So he at the end he retired very comfortably at 55 years old. But so one multifamily property and a couple others. They're a mix of single family, commercial, retail, and commercial
Mm-hmm.
small business.
Yeah.
And so I've always wanted to do something in real estate. And um, I love, uh, like when I stepped away from my previous company, I had to make a decision. Okay, so where do I go? And I really love this idea of tech-enabled industries, right,
Mm-hmm.
or businesses. I think that's where most of the opportunity is, rather than making like a pure tech play and go work for some AI, company or build some AI product that's very long term. I really wanted to see real world impact, short, midterm, and I always wanted to do something also in the subprime consumer, especially since the pandemic, because with the pandemic, some necessary measures. I think we talked about this before, this session, right, where it was necessary to take some measures and drive some stimulus in the economy. We signed basically $1 trillion check, and uh, we had been coming from a period of quantitative easing, right?
Right.
So this was a clear indicator to me and a lot of other people that we were going to go through a period of quantitative tightening, obviously, and that means some level of financial hardship, high interest rates, high inflation, and so on.
Yep.
So I wrote a thesis for this company, basically stating that this is almost like a lost decade, right? So it will take 10 years or more for economy to the real economy to catch up to the fiscal policies, and that creates a lot more barriers for people that are in the subprime consumer space, right? So whether
Yep.
you're a student, right, that just graduated, is entering the workforce, or a new
Mm-hmm.
immigrant, or a low family, when you have access to credit or savings, it's easier to navigate this period, right? But we don't have any of those. What do you do, right?
Right.
And so you're stuck, right, in that situation. So I started looking at, okay, how do we get subprime consumers to build credits, and how do we get them to report, like for example, rent payments. They're not homeowners, right? Obviously, so they'll
Mm-hmm.
rent, they use the rent payments and so on. So pulled the thread. There's a lot of companies working in that space, and we landed on uh, on a hypothesis that we need a product. We want to offer that for free, like the credit reporting for free to the residents if they choose
Yeah.
to do that.
Uh-huh.
But we need a product that will be attractive to the owners, operators, right, to the landlords, because
Right.
that reporting has to come from there, right, from that end. And so we connected with a friend that is very deeply involved in the subprime lending industry, and we decided that we were going to start with sort of kind of our wedge would be the underwriting, aspect of it. So this is not something new that we're building, right? It's an existing method. Essentially, it's like advanced machine learning technology from the subprime lending industry, right,
Mm-hmm.
that the banks use to underwrite loans, right, to
Right.
the multifamily rental space. We
Right.
believe that the credit score is not a good predictor of rent payments, right?
Right.
It can be a good predictor of loan payments, but there's definitely an opportunity. It's surprising that no one's really doing that at, like broadly. I know that there are others working on this, but we believe we have a really good competitive advantage in our team. Decades and decades of experience covering anywhere from fintech, lending, real estate,
Hmm.
navigate regulated markets really well,
Yep.
and we experience and so on.
So how to explain the difference between how somebody say, so we'll just use an example. Multifamily property, single family property, doesn't matter. Typically the owner will have somebody fill out an application and they'll run a background check through the various services, right? TransUnion or whoever, depending on what property management system they use. It might be through their PMS system, or I just that was redundant. But anyway, it might be through their PMS or it might be through an outside service, whatever it might be. They're going to pay for some sort of credit report, background check report, that kind of thing. So explain how your service is different.
That's all good, right? So what we do is we replace that.
Hmm.
We do all of those things. So it's like a premium tenant screening product, right? That'll bring all of that and plus our predictive capabilities. So
Okay.
I'll give you an example from the lending industry. Back in the day when I was at the bank, one of the things that we did was we noticed that um, lines of credit were not getting any traction,
Hmm.
and the bank, one of the goals was to increase that product, right? The volume of that product. One of the reasons, the biggest reason why it wasn't getting traction was it took 7 to 10 business days to get an approval. And
Hmm.
sometimes, because everything was done manually and went to some back office, right? And sometimes people didn't even get a response, right? There was a lot of things that were broken in that space, but the primary reason was it just took a long time.
Okay.
And by that time, maybe you found somewhere else, like you found
Hmm.
another option, or you got approved quicker at another institution and so on. So, and we had a lot of data, right? I wasn't personally responsible for that initiative, but worked very closely with the team. And so we had a lot of first party data, right? So what we did was we looked at, let's say, several hundreds of thousands of line of credit applications historically and tried to
Hmm.
identify what are the characteristics of the lowest risk sort of scenario. So we try to
Okay.
create sort of a for that, right? Hundreds and hundreds of different data points that were put into, taken into account to identify what is the profile that is the lowest possible risk. And so we came up with something around like a criteria. So if the person, um, is looking for under $30,000 and their income is this much and they live in this area, so on, right? So hundreds of parameters. Then we worked with the underwriters to get so almost like a fast track approval. So if they fit
Right.
that criteria, they can get a response quicker. They don't have to go to manual processing. We can automate that. And they discovered that about 30% of people who apply for a line of credit fall into that scenario. So it
Oh,
was a
okay.
huge low-hanging fruit. Obviously, it took months, right? It's like a core data science exercise, build a
Right.
machine learning model, and to test it and train it and so on. But at the end, that was the conclusion. So that was approved very quickly, right? And as soon as they launched, they were able to see the volumes going up. And there's two benefits of that, right? One was the person who applied, most of the times they had their money in their bank account within 24 hours,
Hmm.
right? So that's a fantastic. Sometimes they got a response, like an approval response, right away on the screen, and then, like I said, the money was transferred within 24 hours. The second benefit was, uh, you're if you're directing 30% of people to the automated sort of happy path process, now your backlog for everybody else is lower, right? So you can
Right.
start approving them faster using
Right.
the same team. And then over time you can expand that from 30%. You can ask, because the beauty of machine learning, right? And some people refer to it as AI. I don't like to.
Mm-hmm.
I like to make that distinction. Is you can now improve, and that model can take in new information, right, and continue to
Mm-hmm.
improve to changes, economic factors, and so on.
Right.
And So you can start asking questions like, okay, how do we go from 30% to covering 35% and 40% and so on, right? And so that is exactly what we're our approach, right? So that's the value add in our model, right? That we're
Mm-hmm.
building and that we're testing for. And we're starting with multifamily, but there's applications in commercial, right? Small
Right.
business.
Right. Yeah, for sure. So you're building out a persona for the ideal tenant, which then can learn over time as, you get more data in there of and tweak that persona depending on the criteria. They can make it as restrictive or as open as an owner wants, I'm assuming, depending on their need, right? If they're in lease up, they'll be a little wider on who they'll take. And if they're, got 2% occupant or 2% vacancy, they might be a little more restrictive. Okay, that's fine. That makes sense.
Yeah.
Yeah, that's pretty
And you
cool.
can be more accurate, right? The idea is, yes, you're going to continue to look at the credit score. You can continue to do the background checks, right? Well, all of that will be in place, but we'll give you the ability to predict two things. One is like the inherent risk in
Mm-hmm.
that profile by looking at the
Yep.
right data, not just the credit score. Um, and we are also going to help you identify long-term value. So
Right.
this is done in every under industry. It's really, surprising that it's not being done, in multifamily, potentially in other, segments as well. So we're able to predict how likely is this person to renew within 12 months, after 12 months, so they're going to be like a 1 year, a 2 year, a 3 year tenant. Um, and we can do that before you hand over the keys. We can do that throughout their life cycle as well, right? So
Okay.
that gives you the ability to identify. So, for example, right,
Mm-hmm.
we were speaking with a large multifamily operator in the segment just a
Mm-hmm.
couple of weeks ago, and they were they gave us an example of a tenant that was moving,
Mm-hmm.
and so they were going to churn, right? And so they didn't know, right? So they had to react to that within 60 days, right? And normally, it's the trend, like you're basically built when you're forecast, you build that 12-month lease into your model, right? Into your forecast model, and that's it, right? Like you have no way today you don't have the right tools to be able to predict, right, how much value is this going to be. And so if they were on, at least if they would have been able to, for example, identify, we would be able to tell them, right, hey, this tenant tends to move within that 18-month mark or 24-month mark or whatever it may be.
Mm-hmm.
So they would have been able to now actually engage with them proactively to understand, hey, is everything okay? Right? Are you happy and stuff like that? And they would have said, hey, yeah, actually, this is a good timely communication because I'm planning to move in the next 3 months. And so they would have been able to, have their property management team or, outreach team ask,
Yeah.
oh, why are you moving? And they might have said, oh, I'm moving because it's just the nature of my job. My company moves me around. And, maybe they could have asked, where are you moving to? Oh, I'm going to Chicago, right? And they could have said, oh, we have 4 properties in Chicago. What are you looking for, right? And
Yeah.
so all of a
Yeah.
sudden now you can say, okay, we happen to have an apartment in Chicago. Maybe it's a little bit more expensive than what you have, but it has a great view, but it has an extra parking spot. So if you only have one car, you can rent it out, and so that kind of conversation can happen. And
Mm-hmm.
believe very strongly in this. Like my previous company was in the customer retention space, right, in the e-com industry and retail. And so customer retention is one of the most important, most valuable things, right,
Right.
you can do
Right.
once you acquire a customer, like
Right.
retaining. So um, if you do that right, you're able to now retain that customer, right? They're moving, so you can help them move into a property. Maybe you could offer them like a lot of value by saving time on, you don't
Mm-hmm.
need to apply, you don't need to look for places, right? Because you already trust us, you know that we deliver this level of quality, right? And
Mm-hmm.
so we can end your lease. We could start a new lease at the new place. It'll all be seamless for you. We'll send you the
Mm-hmm.
package, right? And then you can sign it and things like that. So
Right.
all of a sudden now you're helping them solve problems, right? So there's so many opportunities in that space. And so we're very excited about the renewal kind of long-term value prediction, and
Hmm.
but also the risk
But
aspect, right?
yeah, for sure. I mean, at the end of the day, you're providing greater transparency into the tenant and their habits and their preferences, which is super cool. I mean, imagine if you're a leasing agent and you know that this person tends to move every 16 to 18 months. Why not give them a 16-month lease? Why not give them an 18-month lease, right? I mean, just offer it to them. You don't have to be creepy about it and say, hey, we see that you move every 16 to 18 months, but you can just say, hey, we have this option for you if you would like to sign an 18-month lease, and they'll go, oh yeah, that'd be great, right? So then you're not having to negotiate a renewal or whatever it might be. But does give you better insights into the tenants that are probably at that moment not thinking about what they need to tell you, right? Because that's what happens a lot of times. We're human, we're tired, whatever it might be. We don't know what we want to say or what we could provide. If we provided this information to you, it'd be super valuable in how you structure this lease or whatever it might be. So that's super cool. That's awesome. Yeah, that's great. That's very
Yeah,
good.
segmentation is something that is, everyone we talk to, and we're talking like we're going, we're our niche is going to be large and institutional, operators. And so we spoke with many operators. We have a lot of those in our personal networks, right, that are already listed to be early adopters. One of our co-founders is also an owner operator, and in every other industry, when you ask your data team or your IT team, who can you pull a list, right? What are the segments? Who are
Hmm.
pull my rent roll and then segment by what are the tenants that are going to be long term? What are the
Hmm.
ones that are at risk of churning right in the next three
Hmm.
to six months? That information doesn't exist today, and we're bringing that to the market.
That's awesome. No, no, that's super cool. So, as it interacts with a property manager's daily life, what do they see? How do they see it? Is a report that's given to them? Does it feed into the property management system, or is it a separate system, or how does that all work?
Yeah, no, so it integrates with Appfolio, Yardi, Rent Ready, RealPage, right? And so what you got, we do have our portal, right, where it's you see it's like a dashboard, right, that
Mm-hmm.
supports up to 100,000 units, and you can drill down into each unit, each application. There's
Mm-hmm.
opportunity to customize the rules on a per property
Right.
basis, right?
Mm-hmm.
Navigating each market, sometimes even each building, right, has its own nuances. And so that's what we specialize on. The enterprise reporting capabilities are there. The compliance element is there too. So everything is
Mm-hmm.
time stamped, holds up, and kind of like the scaling across jurisdictions is a challenge, right?
Mm, yep.
Even municipality, at the municipal level sometimes. So we bake that in. And everybody, regardless of the plan that they're on or what level, right, they're at, right, whether it's a 5,000 unit portfolio, 20,000 or 100,000,
Mm-hmm.
everyone has access to the same base level technology.
Yeah, that's very cool. That's awesome. So, where do y'all vision what's happening next on your product and where you're at or what you're trying to achieve? What's the next on the roadmap, on your roadmap?
We our product is not live yet to the public.
Mm-hmm.
We're testing it right now, and I want to be really
Okay.
transparent about this
Yep.
because one advantage that we found was um, talking to owners operators without having a product that is ready to be sold yet, even though it's already in testing, it kind of diffuses a little bit of the tension in the conversation, right? So it's not a sales conversation, it's not a sales speech pitch.
Mm,
What we're interested in is just having an open conversation to understand what are their biggest pain points, what are their biggest challenges today, what's keeping them up at night.
yeah.
So, and then we're using that feedback to tailor and kind of shape the roadmap so
Mm-hmm.
that we can it's sort of an 80-20 rule. Like what are the 80% the 20% of things that we can do right off the bat to solve 80% of the problems, right?
Mm-hmm.
So focusing on the painkillers first, and then we'll add the bells and whistles and the vitamins after.
Yeah, you're doing market research, which is cool, which is what every startup should do.
Yep. And
It's
I
always
think that's
usually
such
the plan. Yeah, you have to do that. You got
and
to get the voice of the customer in early because going creating a product when you're just guessing at what they need is kind of like a dumb plan. So
I
that's
mean,
good.
we do have, like I said, like one, we have our, one of our co-founders is an operator, so we have a lot of data, right?
Mm-hmm.
We have five companies who are already, bought in as early adopters from our personal network. So I think the base level market research has been, defined, right? And the product has been defined. But as we continue to talk, right, and you should do this even if you have a product, right?
I
So
know.
that's one of the biggest things that we did back, in financial services, whether it's retail, like every industry, right? You want to continue to have like
Mm-hmm.
to take a pulse of the market because
Yeah.
things change, right? What every quarter, things might
Mm-hmm.
change, it might evolve, and we want to bake those in continuously, continue to iterate on the product.
Yeah, you should be always listening to your customers or prospective customers. Yeah, market research never ends. You do it all the time, right? I mean, because preferences change, trends change, and you have to, when you think you've got product market fit, oop, there it goes. It changes, right? And so you're just like constantly trying to, keep up with what everybody's wanting or demanding or needing, depending on what's, but you're dealing in a regulated area, right? There's fair housing laws, there's different, rent controls, rent stabilization laws. There's a lot of different things that different owners have to deal with on a regular basis, right? And then, if we're talking about this whole thing around price fixing, you can imagine that it's not a big leap for the DOJ to go from okay, you're price fixing to oh, you're like illegally letting certain people in and not be, they'll go there, right? I mean, so it's kind of an interesting thing. So you're in a very really regulated area. So how are you addressing all of those kind of concerns?
Yeah, so we're developing relationships with all the regulators. We're establishing partnerships with the academic, sector as well. The biggest priority in the model is for it to be unbiased, right?
Mm-hmm.
Uh, and we also want to make sure that the tenant is at the heart, like the resident is at the heart of everything we do. So there's it goes back to the fundamental thesis for the company, right? So this is the wedge, this is the initial product, but the idea really is the vision, right? Is to have an actual impact in the communities where we're going to operate to lift. That's why it's lease lift, right? So we want to lift people up from the subprime segment into the prime segment
Mm-hmm.
by helping them, report. So if that owner operator is on lease lift, all the residents will have access to credit reporting for free, and that can make a big difference, right?
Yeah.
So like maybe 60 points or so within 30 to 60 days. As soon as they
Yeah.
start reporting, it goes up from there. And so that can make the difference between somebody qualifying for maybe a car loan, right? Maybe they need to buy a car, right? That will help
Mm-hmm.
them, further build credit, or maybe, get a credit card. Maybe it's their first credit card, right? And so as you start building in, um, into that, profile and increasing your credit, you have more access. You're going to start unlocking. It's like levels, right? You unlock
Right.
access to financial opportunities, and then our goal scenario is we're going to be measuring this, right? So that has not been fully defined yet, but I do want to structure the company as a social impact company. So we're
Mm-hmm.
talking venture side, we're talking to a few a few investors that operate in that space,
Mm-hmm.
and we're determining right now how can we measure this, right? Is it just um, you know, uh, are we going to see an impact in, let's say, evictions, right, or delinquency in the markets where
Right.
we operate? Right?
Right.
And that's the goal, right? It's
Yeah.
the tools that exist today are not giving owners operators the right information to underwrite tenants, and that's
Yeah.
so that is almost like raising. And in some markets, some of the decisions that are being made, like banning security deposits and things like that, are kind of backfiring a little bit because the owner operators are increasing the qualification requirements, which ends up, basically pricing a lot of people out of the market.
Exactly.
And so if you
Yeah.
have the tools to really take a closer look at the tenant, right, you might be overlooking really good, reliable, diligent people, and at the same time, giving the keys to like bad bad actors, right? People who game the system, right? There's this famous woman in Toronto. I'm based out of Canada, um, but our company is based out of Chicago. But there's this famous woman that made the news in Toronto because she would basically go in, like move into a property using fake documents,
Mm-hmm.
and then she'd never pay, right? And then as soon as the landlord, right, uh, started eviction process and so on, she would sue, and it would take like 4 to 6 months, maybe 8 months or so to evict, right? And then she would do that in the next property, right? And so there's a lot of fraud going on as well, right? Post
Yeah.
pandemic, especially in some tough markets like California, Atlanta, New York, right? And so on.
Mm-hmm.
Even Toronto, Vancouver. So that is going to be like built into the product as well, like whether it's pay stubs, documents, right? You default, ID verification, employment verification, and so on.
Mm-hmm. Yeah. No, no, I get you for sure. I mean, that's the, obviously, there's a large concern, especially when you're in rent regulated environments or rent stabilized rent, or you have unfriendly landlord laws, right, where you can't just evict people. So that all that does is put all of the it puts more tenants out of the market because your qualifications have to be obviously tighter because you don't have good underwriting, right? I mean, you don't have the ability to get in. So you're solving a problem around, okay, how do we get the right tenant in versus, charging them so much just to mitigate that they might be a bad tenant, right? You know what I'm saying? So, I mean, this plays into a lot of different things all around all of it. Like, I mean, even on the renter insurance side or the deposit insurance side and that kind of stuff too. It's really cool. That's awesome.
I
Um,
spoke with, I,
yeah.
sorry, go ahead.
No, go ahead. It's fine. Go ahead.
I was going to share a story. It's somebody that we actually interviewed for the company the other day, and she told us the story that so she's pursuing a master's degree, but she had to move, right?
Mm-hmm.
And she had a full-time job, right?
Mm-hmm.
Doing the master's at the same time. So great, young woman, and she could not qualify. She applied to multiple places and she could not qualify, and
Yeah.
so she ended up having to stay with a friend for a while, and then eventually she was able to sublet, so she kind of had to share an
Yeah.
apartment with somebody, a roommate and so on, and but that added a lot of stress, right? And this is somebody with a stable income, right, who's pursuing a master's, so really there's no reason why that she shouldn't have been able to like get matched with the property that is within her price range and enter the market. And
Mm-hmm.
so from the landlord owner operator perspective, some of the challenges that we hear in that large institutional segment is um, there's also a need to centralize and streamline operations, right?
Mm-hmm.
So let's say you own 20 plus properties, right? How many people do you have at the company looking at this kind of sensitive, like tenant background check information, right?
Mm-hmm.
So it's a privacy risk. The rules are all over the place because every property is using different rules. Maybe they're using different vendors. Maybe there's different processes being used. You don't really have visibility as a management team or as a leadership team. So what we one of the big value adds in lease lift is going to be exactly that. We're going to help you centralize that, so you tighten that process up, so not you have less people having access to this critical sensitive information
Right.
and personal data and so on, and you are now able to like maintain a much um, uh, a much better control at volume,
Right.
right?
Right.
Because if
For
you're
sure.
doing 10 underwriting decisions a day, that's not a big deal, right? But if you're doing hundreds, right, and that's spread across multiple markets, multiple geographies,
Mm-hmm.
it becomes a big risk, right? And
Yeah.
so those are things that are not really, they might not be top of mind,
Mm-hmm.
but it is there, right? It's baked into the process where, like, we were looking at the data. There's a company, a fraud prevention company, that did a large study on this nationwide, and they found that the average 3,000 unit portfolio is wasting $2.8 million a year on fraud, delinquency, and evictions.
Yeah. Yeah, for sure. Yeah.
And so our goal is to try and slash that in half at least for the operators that work with us. It is definitely possible, right? You can see, and like I said, this is not something new. It exists in
Mm-hmm.
other industries, right? All the major
Yeah.
banks, credit unions have their own, their ones the ones that are forward-looking have their own underwriting models and,
Mm-hmm.
invest in technology, it's a really good practice to have. So going back to your point about price fixing and so on, so you can use these are tools, right? So you can use them, for good, or you can use them, for bad. Like obviously, we're seeing what's happening with that, and we're taking an opposite approach to it.
So, do you have the ability to help the owners track their decision making, right? So, like, say you qualify somebody, check, they move in. Are you able to say, okay, based off of our parameters, and then track it later to see how right you were? Do you have that
Absolutely,
ability? Yeah, okay, all right. Because I think that's
that
what a
is
lot of people
really
lose.
the value.
Yeah,
So
yeah. And a lot of people lose visibility to it. They're taking so many applications all the time, and then they lose the from the point we made the decision to what was the fruition of that decision, right? They lose that track of that. So you're able to do that. That's cool. Yeah.
that is the phase that we're in right now, right? So
Yeah.
we're able to take every month a snapshot of the data, right, and feed that back into the model to improve the accuracy of the model over time.
Okay. That's super cool. Yeah. I mean, I think that's obviously that's a value in it, but even in because I think people make these so here let's talk about even 4 years ago you were what they tried to do as far as from securing the PII and all these other this information that people might have on these applications. We obviously went away from taking paper applications to now we do everything online. And then it was you're online, but nobody's reviewing your credit report. You just get this score, right? So 0 to 100, and we'll take somebody who's above a 78 or whatever it might be, right? That's kind of where it all transitioned to do. But it didn't allow, I mean, sometimes you would get their credit report and like at a higher level, somebody would have that if they wanted to, if there was like a review, you can accept them under conditions. Then you go through it. But the information that was provided to somebody who was independently making that decision wasn't the greatest information. Like it was like, maybe, yeah, like these are the flags. But what I was finding was I don't even know that the data you're giving me actually matches the person that's standing in front of me. Like it might be the person, it might not be the person. How do I know? Right. And it was really difficult to make those leasing decisions when you couldn't really truly trust the data. So how do you solve that problem?
Well, number one, we're working with not just the credit bureau data, but also first party data that sits
Yeah.
with the landlords, right? So and we're doing that at volume, right? So you need a lot of data to reach a level of accuracy with the model.
Hmm.
The other is, and there's a few companies doing this already. Is the application itself uses Plaid, right? So we have a partnership with Plaid. Plaid actually rolled out a really interesting product focused on the residential rentals space,
Hmm.
where you can actually not just see a snapshot, right, of the financial sort of situation, right, with the credit check and so on, but you can see the trends going back 9 to 12 months, right?
Okay.
So you can see it's not just a snapshot. You can see, is it getting better? Is it going down, right? Has that person acquired a lot of debt in the last 3 months? Do and then you can, because Plaid connects directly into the prospect bank account, you can prove, right? You can validate and verify if
Mm.
what they say that they are paying for rent is correct. You can see the rent payments, right? And you can see their income as well, right? You can see
Okay.
paycheck.
Yeah.
So
That's
this is
awesome.
I think
Yeah.
that's where the space is going, right? It's definitely here. It's like the present. But what no one is really doing is even some of those companies, like some of the tenant screening companies offer a recommendation or a score, like you mentioned. But in the conversations that we've had and in our own experience, nobody really believes those scores,
Yeah,
you know?
exactly. You don't believe the scores. I know. Yes,
Yeah. So
exactly.
so it's like a gut-based decision, right? Some companies are a little bit more sophisticated than others with the rules, but like you said, there's always people in the company that will have the authority to override, and they might be right, they might be wrong. Um, what we want to do is um, be in a give owners operators tools that they can actually trust, right? So it's a true machine learning model, right? It's not just a simple algorithm that
Mm-hmm.
tries to give you a number.
Mm-hmm.
It's actually something that you can use to like base your decision on, and
Mm-hmm.
especially because if somebody is above 650 or 700 or so, that's most times it's sort of an easy decision.
Yeah.
The challenge is really in that gray area,
Yeah.
right? And some of the lower, like when you get into the subprime segment, that is really difficult to navigate. But if you can navigate that space, it's a
Right.
huge market, and it's a good market too, right? So it's a good
Yeah.
long-term market. So you're going to be acquiring, if you have good customer service, if you're an operator that sees your residents as customers, right? And you have a team that is measuring, their feedback,
Mm-hmm.
is talking to them, is getting their sentiment. There's a lot of companies out there offering those tools. You can actually make a lot more, right, out of your existing customer base, and that means growth, right? That means less waste and defaults, evictions, less headaches. And in
Mm-hmm.
some markets, what we've seen is post-pandemic, they have not stabilized, right? Atlanta is a market, all of California, New York, right? There are a lot of
Mm-hmm.
markets. I think I mentioned that has not stabilized, and so there's a need for a product like this. I really love I think it's Jeff Bezos that talks about. Um, most people ask when you're starting a company, or building a product, what is going to change, right, in the next 5 to 10 years,
Right.
right? And so he talks about, don't ask that question, ask the opposite question, what is not going to change, right? And then build for that, right? So for Amazon, his hypothesis was people like vast selection and low prices, right? So any dollar invested into those that advances those goals will, is very high confidence, right?
Right.
Because you're going to see value out of it. And so by the same token, right, our fundamental hypothesis is that owners operators want less delinquency, less defaults,
Yeah.
less evictions,
They want to be more
and
profitable at the end of the day.
they want
That's
to be
it.
more profitable. Exactly. It's an, but and that is not going to change in the next 10
No,
years, in the next
it's
20
not.
years. That's going to be true. And so we're very confident, right, in the application of this, technology to the space, and then over time expanding it to other segments as well.
Yeah, yeah, for sure. And I think what we have the opportunity to do is that tenant now can take their history with them, right? That it's a good history, right? If you're reporting and you're putting it out on the credit bureaus for them, then they're able the next group is able to see that, right? Because that's what the big issue is a lot of people don't report on the rent. And so therefore, when you go to the next place where you choose to rent somewhere else or you have to move, no, they can't see what you're, and then they're reliant on previous information if you happen to get it. It's like the big unknown, right? And so you're having to guess. But if you can remove the guesswork out of it, then that's great. And it's good for the tenant, it's good for the owner, more transparency. So it's always great, right? So I mean, that's super cool for sure. What else do you think besides, I mean, this is the big problem that you're solving. So that's super cool. But and obviously this is for it's not just for multifamily. I mean, you want to get into like office space and understanding the whole thing about a business credit. And that's like a whole, like you open that can of worms, have fun. Like nobody can understand business credit and everybody has it. So it's really interesting. So are you looking to get into that space too eventually?
Yes, yeah. So part of our team, our technical team, comes from the SMB lending
Yeah.
space,
Yeah.
right? So again, I mean, I'm not going to say it's a solved problem,
Yeah.
but because there are nuances, right, in every segment and every industry, but
Mm-hmm.
the fundamental hypothesis for that is very, very strong, right?
Yeah.
That it's not like a lift and shift, but if you have the right expertise, right, and the right team, which we believe we have, and very confident, then we'll be able to hopefully address those challenges as well.
Yeah. Yeah.
There's in multifamily and single family, there's also opportunities in regarding security deposits. That's like goes back to the fundamental like vision of the
Mm-hmm.
company. So we continue to remove barriers for subprime and people entering the market. One of them is
Mm-hmm.
security deposits. So if you're a student, like these days, things were different like pre-pandemic, but these days, if you let's say if you're looking to rent an apartment that's $1,400 or $2,000 a month, and you have to put up anywhere between $2,000 to $4,000 in security deposit, right? A lot of people don't have that today.
Right.
And so there are some operators starting to uh, offer solutions for that. And so that's an area that we're looking into. Um, and in property management, there's some big challenges as well. But that's a sort of a separate area, right? So we
Mm-hmm.
might look into solving some of those issues there
Mm-hmm.
this is where like the AI aspect of it might help, right? The
Right.
LLMs with evaluating customer sentiment and work orders and being in touch with your customers, right?
Yeah.
Very often, managing suppliers, right? And maintenance, right? So there's one of the ideas that I really love that are sort of in the back of our heads right now in our roadmap is taking lessons from the short-term rental industry and
Mm-hmm.
applying them to, right? So if you look at Airbnbs, right, people that operate Airbnbs, for example, the to stay at above 4.8 stars, which will get you to be profitable essentially. If you're like the difference between 4.6 and 4.8 stars is 4.6 and nobody sees you, right? At 4.8, everybody sees you, right? So it's that big of
Mm-hmm.
a difference. And so, the number might be, plus or minus one or two, I'm not giving you like exact numbers, but what we are hearing is they've had to develop um, a really good streamlined operation, right?
Mm-hmm.
There's cleaning, there's like you need to maintain a certain level of quality, cleanliness, maintenance, right, with the property. Otherwise, people will rate you a lower score,
Ah,
and you're not
okay.
going to see it. Sorry, and so we're really interested in how we can apply some of those lessons, right? Some of those like learnings
Uh-huh.
to. Sorry about that. I've been sick for the past couple of days.
Oh no, you're fine. You're fine. It's all good. It's all good. Keep going. Yeah, so the lessons in the tenant preferences and are they going to stay, choose you, not choose you, learning all of that. That's super cool too. Yeah, that's awesome.
Yeah, so things like that double-sided rating,
Yeah,
elements, right, in those
yeah,
two-sided platforms,
yeah.
um, communication aspect. Like, so if you go into Airbnb, you're one of the things that people are really used to in that space is communicating with the host,
Yeah, 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 for
right?
sure.
So
Yeah,
you get into like if you do it a lot, like you get into a habit of asking, right, the host, hey, I'm gonna have a friend over, is that okay? Or do you what how does the TV work, right?
right.
That level of customer service, right, has it's possible to do that at scale. You just need the right tools, right, and you need AI assistance, right, to be able to
Mm-hmm.
prioritize. For example, one of the things that Airbnb does is it tracks how quickly you respond to guests,
Mm-hmm.
right? And so it will downgrade the hosts that take a long time to respond, right?
Mm-hmm.
And give the hosts that respond quickly a better score. So
Right.
we see a lot of applications in those elements. There's also the operational aspect of it, right? For example, like having a clean crew, maintenance crew. Like how often do you do that? Do you do preventive, right? And so there's a lot of opportunities to streamline that in long-term rentals as well. When you're turning in units, right? You have that 60-day period and so on, and that can mean the pictures, right, being updated, right, like professional quality pictures and maintaining it at a very very high level of maintenance, cleanliness, and so on, are some of the opportunities that we see in that space.
Okay. Very cool. That's awesome. Well, this has been a great conversation. And look at that. We're here at an hour and it's gone by fast. It's kind of how it goes. So if somebody would like to get a hold of you, how could they do that?
They could go to our website, leaselift.ai,
Mm-hmm.
or just shoot me an email. It's phil@leaselift.ai. And we are looking to speak with any owners, operators in that even mid-sized, large institutional segment.
Uh-huh.
Like I said, just a open conversation about pain points, and maybe if they're interested in getting into our early adopter list. We're going to be launching our beta later this year. It will be free for the early adopters,
Mm-hmm.
and so we're looking to collaborate and partner with forward-looking companies, right, that want to actually make a difference also in the communities that they operate.
Awesome. Very cool. Well, thanks so much for coming on the show. This has been a great conversation. Very, very cool. Very, very
I
cool.
had a lot of fun. Thank you so much, Amy.
Sure.